Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 2nd, 2021. I want to quickly recap stock market activities last week and give some stock ideas for next week so we can buy some good stocks. So with that, a quick recap here. Energy stocks are going up. Stocks like EOG, PSX, Valero, Schlumberger. And financial stocks are higher. American Express, Charles Schwab, Bank of America, Wells Fargo, and Goldman Sachs, and a few others. Transportation stocks are doing really nicely. I think we had a good quarter from UPS, FedEx and JB Hunt. They're also going up. Real estate stocks are trading higher. We have SPG, DLR, CBRE. Cryptocurrencies up this week, last week. Marathon Digital, Riot, and MicroStrategy. Semiconductor stocks traded down. I think there is some weakness here. NXPI, Texas Instruments, ASML, Intel, Kopin. And large cap China stocks are down. Think about Baidu, Tencent, NetEase, Alibaba. Technology stocks are down, even though they had some good quarterly earnings. Stocks like Microsoft, I think it came down, and we also have Salesforce, Avago, or Broadcom, and Adobe. They're also down. Healthcare stocks were down. I think Merck had a bad quarter. Even Thermo Fisher, Lilly, Abbott, Danaher, they're down. Solar stocks are lost big time. I think Enphase Energy, ASTI for solar, Sunrun, Nova. Clean energy stocks are also down. TPIC, HASI, FCell, BP. Electric vehicle stocks are down. We have this, XPEV, GP, FSR, Ford, Excel. I think Ford has a little bit issue in the earnings, but I think it's really good to buy on this pullback. Gold and silver stocks are down. Fortuna Silver, CDE, EGO, IAG, and EXK. So with that, let's dive in and see what can we do. There are a lot of good stocks because of earnings. Either they beat the earning and still came down, or they missed the earning and stock came down. I think there are some good opportunities in this market to buy a few of these stocks. So with that quick earning update, we'll go into a little more details in the subsequent section. Colgate Palmolive stock, beat the support. They beat earnings. I think because of this inflation fears, I think they kind of did well. Burger King, I think they did well. McDonald's, they also surpassed the pre-COVID 2019 levels. That's a good story. AbbVie stock is up. I think Humira sales topped 4.8 billion. ExxonMobil profit is up. I think they are doing well. And Molson Coors stock surges after reporting surprise profit. That's a good story. Royal Caribbean jumps, narrower than expected loss. Also, CDC is probably they'll let these cruises cruise from next summer potentially. Facebook jumps. I think it's a good story there. Apple also rises. So these are some good stories, and we got some more positive earnings also. On the negative side, we have Clorox. Clorox used to be the stock last year. Now it's really tough comparison, so it dropped by 5.9%, swings to a loss, missed the estimates. I think we got this new CEO. I think probably she's trying out some new things. Hologic stock falls 7%. This is a good company. In stock falls, probably a good opportunity to buy. Microvision, everybody is buying Microvision because it's very widely manipulated stock. I think stock tanks after the lower sales. Teledoc stock stumbles. I think this company used to do very nicely with all the virtual doctor visits, but now it's having some tough time. Wider than expected loss. I think that's where stock dropped. Dominoes, they used to be very good last year. Everybody wanted to deliver pizza. I think this time, revenue is shy of the expectations. Stock dropped. Merck, I think it's a good company, but stock dropped. I think probably it's a good time to buy some Merck. Microsoft shares slide. I think it's really their Azure, their cloud division. It's in line earnings, so that's why it kind of dropped. Twitter slides 8%. Really, I think it's users number of users issue. Revenues as expected. It could be a good opportunity to buy some Twitter. Enphase Energy, it's into solar. They tumble despite of earnings beat. Guidance disappoints. That's the reason for the drop. ServiceNow drops. I think it's again billing outlook disappoints. So these are some key earnings update. We'll dive into a little more detail. So from a broad macroeconomy perspective, from a big indices perspective, as you can see here, S&P 500, which is a ES S&P 500 future, it's sitting at almost top right now. It's showing some sign of sluggishness. As you can see here, it's in the trading range, past 5 days. And same story with the YM Dow Jones future. Again, a little bit flatlining here. 3 down days, 2 kind of sort of okay days. Same story with the Nasdaq. It's kind of in the trading range at this point. Russell, it's sometimes people look at Russell as a leading indicator. Russell, just a little bit dropped, big drops here Thursday and Friday. And bonds, as you can see here, bonds are going up. I think stock market will take some cues from the bond market as the bond will stabilize a little bit. As you can see here, stocks are really taking some breather here. If you look at crude oil is also a little bit. It had a good couple of days, but now it's kind of taking it easy, but not too bad. I think it's a good run here. Gold is taking it easy, kind of choppy here, a little bit to the downside. Dollar, I think it had a good jump here, but nothing great. I think it was falling since last couple weeks or so. It had a small jump here, nothing great here. So with that, let's jump in and look at some big ETFs here. SPY, DIA, QQQ, all trading sideways, as you can see here. Russell is down, like we talked about. TLT is trying to get some traction here. This is a bond. Gold is trading lower. XLP, which is consumer staples, it's kind of getting stabilized now. XLU trying to tick up a little bit. So one thing you should watch so many times is really as these defensive stocks, XLP, XLU, gold, and TLT, as this gang rallies, that's when stock market will kind of the broader stock indices will take some breather. I think that's one thing to watch out for. Then we got XLK, which is technology. Technology is clearly down week, as you can see here. Semiconductors, we have a down week. XAR, which is big defensive names. Lockheed Martin, Raytheon, L3 Harris, Boeing. I think it had a little okay week. It's nothing great here. And XLE, energy, I think that's it had 2 down days, Thursday and Friday. XRT retail also had 2 down days. IYR, real estate is like a rocket ship. It's going up nicely, as you can see here. XLF financials are doing great, and XLI industrials, they're also doing well. I think this is where the sector rotation is taking place. Money is coming out of technology. Money is going into real estate and financials and XLI, as you can see here, and some little bit into XLP, which is consumer staples, and XLU, which is utilities. So with that, let's jump into look at a little bit bigger trend here. If you look at ES, which is S&P 500, I look at this chart very closely. It's sitting at an all-time high, as you can see here. And if you look at skew, I think we always need to pay very close attention to skew. Skew has jumped up. As you can see here, it's crossed 145. It's at 146. That tells you got to watch out right now. This is not the times when you can buy any stock. You got to be really choosy, because the moment skew jumps above 145, as you can see here, it jumped up, came, stock market came down, jumped up, stock market came down. Same story here. It was up here, then stock market tumbled all the way. So whenever skew goes up like this, you got to watch out, because that tells you there is something is up. Stock market is really cautious here. That may be some sell off, because you know we typically need to be very careful as it approaches 150 level. Anytime it goes above 145, we got to be cautious, because that's your heads up. Hey, you know what? A stock drop may be coming. So with that, let's look at a bond here, ZB, which is 30-year bond. It's taking some, I think there is some positiveness here. That's why stock market is a little bit backing out. TNX, 10-year Treasury Index. This is really around the yield. I think that's going up a little bit. So I think we got to be watching out. I think it's a little bit ticked down, but generally yields are going up, as you can see here. DXY dollar, I think they had one good day on Friday. Nothing to worry about here. But I think if it continues to go up, then we have to be watching out, because the bigger multinational companies, for them it will be difficult to really make good profit outside USA. So with that, let's look at few big companies here. Microsoft, I think they had a good quarterly earnings, but Azure, their cloud division was a little bit down. They had a little bit bad week, as you can see here. Apple, again, they had a good quarterly earnings, but stock came down anyways, because expectations are so high. Amazon, same story. I think it came down. Facebook, I think it did nicely. I think these guys are doing really great. I think one thing you have to watch out for is really Apple's privacy and their software update. We have to see how it will impact Facebook. Google, I think it's a nice growth here. Stock is doing great. Netflix, I think these guys had a little tough time. Stock came down drastically, as you can see here. I would be a buyer of Netflix at these levels. Nvidia, I think these guys are coming down a little bit. I think Nvidia is a good stock. There may be a little bit pullback, but overall, what I feel is really these chips. They're into data centers, sensors, multiple things, gaming. As we go forward into future, you can only see these chips are in more and more demand. So that's why anytime Nvidia falls down, I would be a buyer. It's a good stock. J&J, I think finally their vaccine is being used. So I think this stock will go up. They had a big slide, as you can see here, and now it will kind of start its way up. PayPal, I think these guys are really opening, waiting for the reopen. As more and more people travel, I think this stock will, do well. Then we got UNH. This is a nice stock, rocket ship, doing nicely. I think it's a good one to buy on any pullbacks. Merck, I think these guys had a really bad, day here. I think they announced the earnings. Street did not like it. Stock came down. I would be a buyer of Merck. Medtronics is doing nicely. People are really going for those elective surgeries. I think it's a good stock. JP Morgan getting some traction here. I think financials will do well if there's a rate increase or a yield increase. Berkshire, I think it's doing nicely. I think it's a good stock. We can buy this and hold it for a long time. And so is Visa and CME. I think it's a little bit trading sideways here. I like this stock. I'll be buying this anytime it drops. It's a good stock. So with that, let's jump into major ETFs and see what did we do last week. From a last week, perspective, as you can see here, we had energy, financials, transportation, real estate. All these stocks are, all these ETFs are up. And then we got, the bigger IWM, QQQ, DIA. They're all down. So you get the story here. All those high flyers, they kind of came down, but some of the defensive stocks like XLI, XLU, they're all going up. So that kind of tells you about this sector rotation a little bit. I think that's what is going on here. Um, and as you can see here, SMH, which is semiconductor down, technology is down, healthcare is down. So that's where money is going out of these names into these names in green here. And if you want to really participate in the stock market, don't want to play the game of buying stocks, selling stocks, you could hang on to some of these good ETFs like XLF did nicely in 10-year period. IYT, which is big transportation stocks like UPS, FedEx, I think it did very well. And XLY, consumer discretionary, I think that did great, 407% in 10 years. As you can see, anytime you see, above 200, I think those are the good ones. You can buy them and hold it for a long time. So that way you'll be compensated. You don't need to, play the game of stock market. And if you see here QQQ, this has done 533% in last 10 years. Low expense ratio. That's another great way to invest in the future. And then you got SMH, which is semiconductors. It has done tremendously well, 656% in 10 years. You could buy some of these, even XLK, and don't worry about stocks going up and down. So with that, let's go into ETF winners here. And no surprise here. After a couple bad weeks, cryptocurrency is doing nicely. Both Ethereum and Bitcoin both are doing nicely on a weekly basis. And Cannabis is doing nicely. I think as you can see here, MSOS did nicely, 7.5% for a week. Natural gas is doing well. Even blockchain or the crypto, that's also doing nicely. Oil and gas is doing well. And on the I think mainly you can see here most of these companies stock ETFs are doing nicely. So now let's go into what's not doing great from an ETF perspective. No surprise here. Solar, I think they are faring very badly here, mainly because there are some Enphase Energy and couple of solar stocks that did not do well. Clean energy, it's again down. Moon, it's again around some of these big moon shots. I think it's also down. And as you can see here, gold is down, silver is down. So even China, big China, stocks are down. Semiconductor down. Even Cathy Wood's ARK Innovation ETF is down. Autonomous vehicle is down. So you get the trend. All these high flying names, they are down now. More defensive type stocks or ETFs are up. So with that, let's jump into small cap weekly winners. I love small cap stocks because they go up and down so drastically. But if you pick the right names, I think you can do very well. Typically, I tend to look at the names where there is good sales growth, and nice gross margin. Names like Ocular Therapeutics, as an example. Hexo, it also did nicely. Frequency Therapeutic, it had a really bad last month. Now it's bouncing back. Callan Petroleum, Perion, even Clean Spark, they all did nicely. Typically I look at some of these names where there is a good sales growth, but sometimes I can be contrarian and buy a beaten down stock expecting a pullback. So with that, let's go into weekly losers. I pay very close attention to weekly losers because these weekly losers, if there is some temporary setback, you could buy those stocks and they'll give you a very nice bounce back. So with that, Cara Therapeutics, I think they had a very bad week, 50% down. I think as a contrarian, you could buy some Cara Therapeutics at $12. I'm sure these guys will do well. Very good sales growth, as you can see here. Gross margin is zero, but nice institution support. I will be a buyer of Cara Therapeutics. It's really, stock has come down so drastically. It's okay to buy some, don't need to buy a whole lot. Buy some and participate in the rebound. Then we got Fortuna Silver. I think these guys bought a gold mining company. Nice sales growth here, as you can see here. Stock has dropped 21% in 1 week. They've done nicely for the year, so I would be a buyer of this company also. Same story with the CDE. I think this is also into mining. Stock has dropped 16%. It's good to buy on this weakness. They got good sales growth and nice gross margin. Pitney Bowes, I think these guys dropped 13%. Good growth here, as you can see here, and a nice gross margin. I would be a buyer of Pitney Bowes. Very low dollar stock, as you can see here. Then we got a couple more mining here. Eldorado Gold, nice growth here. Endeavor Silver, same story, nice growth. Stocks have dropped substantially in 1 week, and they're I think Eldorado is up nicely for the year, and sorry, Eldorado is up just 4%, but Endeavor Silver is up nicely for the year. Gannett, GCI, nice sales growth, and these guys have pulled back 6%, did nicely for the year. I think it's good to buy some on the weakness. Very low dollar stock. AM Gold, same story, $3 stock, did nicely from a sales growth perspective, and they're down for the year, as you can see here. Gold is really trading a little bit sideways. These guys are really, trading along with the gold for most part. And then we got Rite Aid and Kala Pharmaceuticals. Nice sales growth, as you can see here. Kala is probably higher growth here. And Rite Aid, I think it's because of this COVID vaccination, it did nicely for 1 year, 22%. Kala is down 22%. So I think you got to choose carefully. If a stock has fallen down so much, and if there is good growth prospective, then you could buy a little bit and keep it for a long time. So with that, let's look at mid-cap weekly winners. So here are the mid-cap weekly winners. As you can see here, Proofpoint, it's a security software company, did nicely, as you can see here. I think it's a sales growth, nice sales growth here. They have done 41% for the year. It's a good story. I think I would buy this on any pullback. Crocs, again, good growth here, nice sales growth. I like this, and this has gone so nicely, done very nicely for the year, 312% for the year. Then we got GSX, Overstock, Marathon, Genworth. I think these are all good stocks. I think many folks have wrote off GSX Tech 2 when they really tumbled last month, but I think these guys have a nice rebound, as you can see here. In 1 week, they have done 18%, 2 week 25%. I think these guys are rebounding slowly, which is a good story. Overstock, this company is really very adaptive company. I think they have done nicely. They always look at what's in the horizon and change their company as market changes. Marathon Digital, cryptocurrency play, very low sales. I think they've done nicely from a sales growth, mainly because it's a low sales. But I think this one is good to buy on any pullback. Then we got Genworth and Rheology. Same story, nice sales growth. And Genworth has not done well for the year, but Rheology has done nicely, 298% for 1 year. Then we got Navient and Range Resource. I think the same story here. Navient has got nice sales growth here, and they also done nicely for 1 year. Range Resource, very low dollar stock. I think they got a nice quarter-over-quarter sales here. They have done 68% for 1 year. I think these are also good to buy on a pullback. Then we got a couple more here: Afria, Riot Blockchain, Sorrento Therapeutic. Afria, I think they are merging with they're merging with another company, Tilray. Probably we don't need to worry about that much. And Riot Blockchain, I think this is a good company to buy on any pullback. They're into cryptocurrency. Same story with Sorrento. These guys are also a favorite among the retail traders. They always get into this short squeeze. As you can see, your high short ratio here. I think you got to be careful with this one, but they're down for 1 day, up for the week. So anytime this stock is down, it's good to buy some and participate in any of the short squeeze. Then we got Redfin, real estate play here. They're up nicely for the year, 235%. I would buy this also on any pullback. Next, we got mid cap losers. I like many of these mid cap losers. I pay very close attention to these mid cap losers. As you can see here, some of these companies like American Well. This company used to be the darling long time ago. When they became IPO, did very badly, as you can see here. But typically, what I would do is, whenever they're down, I would buy a little bit. Just sock it away. Don't worry about that. Microvision, they had a really bad quarter. Stock dropped drastically. I would be buying a little bit as it drops, because this stock kind of goes up and down. People like to buy this and cause some short squeeze, high short ratio, as you can see here. Amcor, IIVI, both are nice stocks. IIVI is one of my favorites. It's done nicely. I think I would be buying this on this pullback. Then we got Duyu, Sunrun, Sonova, all these, Sunrun, Nova, some of these stocks, solar stocks, they all came down. I think it's good to buy on the, on this pullback. Duyu is a Chinese stock, $9 stock. I think it came down 13%, came down for 2 weeks, 1 month, and they've done 20% for the year. So it's good to buy Duyu on any pullback in my mind. It will rebound nicely. Then you got BRFS, DAQ Energy, Canadian Solar. Solar, I think it's good to buy on any pullback and take it from there. BRF also has got good sales growth, as you can see here. They have done just 8% for the year. So I would just buy on any pullback, little bit, not too much. Then we got Lattice Semiconductors, Tenable Holding, Fastly. As you can see here, Tenable Holdings has got nice sales growth. Lattice is a steady Eddie type stock. And Fastly is one of my favorites, has done 195%. I'd be buying this also at any pullback. Silvergate is a cryptocurrency play. They have done nicely, as you can see here. Nice sales growth. They're down 7%. They're up 574% for the year. I would be buying Silvergate on this pullback. So next is the large cap weekly winners. So as you can see here, there are a lot of large cap stock. They've done nicely in 1 week. Even these huge bigger banks, 17% in 1 week. Novax 14%. I think these are very good numbers here. I would be buying these companies highlighted in green on a pullback. Right now they're up. I would not be buying significantly. But what I would do is I will look for some stocks which are now showing a little bit upward strength. For example, ICICI Bank, they're down 11% from 52-week high. It may be okay to buy some at this point. And as you scan through this one more here, Shopify, they're down 21%. It's okay to buy some. Same story with the Yandex and Clarivate. So, if the stock is really up so heavily, I would not, buy it because there may be some pullback. But if the stock is already pulled back, I would buy that on a down day. Next, we'll go into large cap losers. Here are some very good opportunity for us to buy. First is Twitter. Twitter, I think, company has done nicely in the quarterly earnings, but there is some guidance and some subscriber growth issues. Stock has tumbled 17%. Jack Dorsey's company, I would be buying this stock on this pullback. It's down 31% from 52-week high. Enphase Energy, one of my favorites when it comes to solar. Stock has tumbled 16% in 1 week and done nicely for the year, 197%. I'll be buying this Enphase Energy on this pullback. And Pinterest, Spotify, PTC, Hologic. Pinterest and Spotify have dropped so drastically. I'll be buying those two on this weakness. And Spotify and PTC, I think, probably it's also okay to buy. I think they also dropped substantially. eBay, ServiceNow, Tencent Music, they all dropped nicely. I think it's good to buy some. They got nice sales growth as you can see here. ServiceNow as an example, it used to be a darling stock, it did very nicely, but now there is a good drop after the earnings. Good time to buy some. Next is Etsy. Etsy, as you can see, a 7% drop. It's good to buy some Etsy on this drop. Same is Cadence Design. I like Cadence Design. It's a good company. Nice drop here. I think it's good to buy on this weakness. Then we got TAL and United Micro. Same story. Nice sales growth here. Good opportunity to buy on this down week and take it from there. Next, we got mega cap winners. So we got some of these earnings for these companies here: Facebook, Alphabet, Amazon. They all done nicely for 1 week, as you can see here. I would be waiting for a little pullback. As you can see here, all these stocks are sitting almost near 52-week high. Not a good idea to buy at the very high. Then we got Netflix. This might be a good time to buy some Netflix. It's down for 2 weeks, as you can see here, down 13% from 52-week high. And then you got Berkshire, Walmart. Both are. I think Walmart could be a good time to buy. It's got a little bit higher short ratio, but I think now shorts have subsided, so now it's not that high. Walmart has pulled back 8% from 52-week high. Could be okay to buy some. Now we got mega cap losers. As you can see here, Microsoft, even though they did good in the quarterly earnings, they dropped 3% in 1 week. Then we got Tesla, Abbott Labs, Tencent Holding, and Apple. All have dropped. I would take opportunity to buy some in this drop. As an example, Tesla. Anytime Tesla comes around 700 or so or below 700, I would be buying Tesla. It's down 21%. And same story, Tencent down 19% from 52-week high. So I would also buy some Tencent holding at this price. And same story with Apple. Anytime Apple comes around 130 or below 130, I would be buying some Apple. Then we got Nvidia, Taiwan, Adobe, PayPal, Salesforce. I think all these have good sales growth, as you can see here. They've dropped a little bit for the week. As an example, Taiwan Semi down 17% from 52-week high. And also PayPal down 15%, Salesforce down 19%. I think these guys have bought Slack.com. I think investors are really trying to see if they can really integrate Slack very well. With that, I would be a buyer in Salesforce.com. Mark Benioff is the CEO. He's doing a really great job. Then we got Alibaba, Procter & Gamble, United Health, Home Depot. Home Depot is at the top. It's almost at 52-week high. But Alibaba and Procter & Gamble could be okay to buy some into this weakness. Now let's look at few companies in a little more detail. This as an example, Twitter. It's a platform for public self-expression and conversation in real time. A very good company. A lot of people use Twitter. As you can see here, stock has dropped. They had a quarterly earning, and folks are really trying to think through: is it a time to buy Twitter in this pullback? This tip rank says not yet, and analysts are disappointed by company's second quarter outlook. They did okay, but outlook is a little weak. And some analysts say Twitter isn't benefiting from digital ad rebound as much as its rivals. So some news here, people are wondering what to do with the stock. But if you look at the price action here, we also call it order flow sometimes. As you can see here, last 5-6 days, Twitter stock is down big, and 30th of April, stock is down 15% because of the earnings guidance issue. And a lot of stocks traded, 88.38 million stocks traded. That's a huge amount. So you don't see that here. So you see all 31, 13, whatnot, but finally 38.38. I think a lot of people are taking probably advantage to buy, and some folks who have a lot of Twitter share maybe unloading some, trying to get out of this, worrying it might drop further. If you look at the weekly chart here, on a weekly basis they were dropped drastically in last 3 weeks, as you can see here. But they've done nicely whenever they dropped even before. They always came back. So with Twitter, I'm not too much worried. I would be buying into this weakness and holding the stock for a long time. And if you look at the earnings per share, I think in 2020 they came down a little bit. I think they had to beef up their security of their platform. That's why it came down from an earnings per share perspective, which is okay. Companies always do this because they want to invest more into their own product. From a sales perspective, I like the clip here. They're doing nicely. It's a up type sales growth, which is always good. Shares outstanding, nothing significant. It's really tad higher, but not a big deal at all. And Twitter, as you can see, a nice sales growth. I like this sales growth here. 1 week they dropped 17% because of the earnings miss. They're down 31% from 52-week high. So I would be a buyer of Twitter stock. With this drop, I'll be buying slowly and accumulating and waiting for a nice rebound. From a chart perspective, it's a 1 year chart of Twitter, Thinkorswim, TD Ameritrade. So as you can see, our stock has done nicely. Earning, stock went up. Earning, I think stock came down after the earning, but they rebounded. One more earning, stock went up. Now stock came down drastically. As you can see here, this stock drop is something similar to the drop here. They kind of rebounded nicely. So I would be thinking, this year also stock will kind of rebound slowly from this drop. This will be a good opportunity to buy. So RSI perspective, stock is sold off. It's oversold at this point. Good time to buy. 41 is really overbought. Oversold. Implied wall has dropped drastically. Very common after the earnings. We call it IV crush. And DMI perspective, it's expected stock dropped big time. The red line, which is a bearish indicator, went up. Blue line, bullish indicator came down. Very natural. On the balance volume is kind of nice here. I like the on the balance volume, showing some downtick here, which is very normal because stock dropped. And check-in money flow is indicating money is flowing out of the stock, which is very normal. As you can see here, stock dropped here, and even here stock dropped. Check-in money flow came down, but reversed and went back up again. So very normal here. The check-in money flow always does this. So I would be buyer of this stock here, taking advantage of this drop, buy slowly and accumulate some. Next, let's look at Microvision. It's one of those meme stock. Everybody wants to buy Microvision mainly because there is a huge short interest in this stock. They do LiDAR sensors used in automotive safety and driving applications. They also have these augmented reality headsets. Looks like they did not do well when it came to their sales fell and losses widen. I think we don't like losses to widen, and it's also one of the most shorted stocks. I think that's why the shorts are really having a good day here. For my earnings per share, they're showing some improvement, as you can see here. Sales, this really down, down, down. I don't like this sales number here. I like to see some good acceleration in sales. Shares outstanding is going up. I would like to see this type of chart for sales, but not for shares outstanding. I don't like this shares outstanding. It's increasing heavily. And from a sales perspective, there is no sales acceleration. They just have $3 million in sales. Sales is decelerating, as you can see here. Nice gross margin, but they have done nicely for 1 year, 4,258. And that's one of the reason valuation is very high. What I typically do with these type of stocks is, if it comes down so drastically, I will buy a little bit and put it away and don't think too much about it. Many times these type of stocks will always come back. So this is not a investment opportunity, it's a trading opportunity. You could buy some and trade it. Many people want to buy this stock and cause some short squeeze. Right now shorts are having their fun. Probably this retail crowd might buy some at this lower price and expect the shorts to squeeze. If you look at the chart here, Microvision, they've done nicely. Earnings flat, earnings up a little bit, earnings sideways, earnings drop, big drop in stock price here. So, from a RSI perspective, it's 51. So it's, a little bit, still at this level also, it's not a good entry point. Anytime RSI goes below 50, that's a good entry point. As you can see here, somewhere here stock, I think the RSI was below 50. So this might come around 50 or a little bit below 50. I would be buying at that time. It's okay to buy a little bit at this time too. And from a DMI perspective, still bullish. As you can see here, the blue line is above red line, but red line is trying to catch up here. So it's really bulls and bears are fighting here. Volume average, nice volume average. I think folks are buying this stock. That's a good sign. And check-in money flow is indicating money is flowing out of this stock, which is very normal. When the stock drops like this, check-in money flow always shows money flowing out. So with that, this is a good trading opportunity. I would buy some for trading, not really for investing, and take it from there. Next is Hologic. They develop, manufacture, and they also have supplies, diagnostic products, medical imaging systems, surgical products for women. I think it's a good company, a very nice company. They had an earnings miss. They missed the estimates. Margins raise. Margin raising is a good story. The revenue and earnings miss. That's a not good story. Stock falls big time. So if you look at the chart here, I mean the price action here, last 4 days continuously stock dropped. Big drop is on 29th. Probably that's when they announced the earnings. And now it's kind of showing some sign of stabilization, just down 1%. I'm thinking it's a good time to buy now. Maybe it will drop less and less as we go forward, try to make a good base and take it from there. And if you look at here, when it had a huge drop, volume was 8.60. Next day, volume dropped. It's a little bit lesser drop. So it's really showing some strength here. And if you look at the weekly chart here, I think they dropped nicely for 1 week. I think it's a good time to buy some at this point. In the past, as you can see here, when they dropped heavily here, 14th February dropped 8%, dropped 4% afterward, then stabilized, as you can see. I think they also missed their quarter last time. This is probably second time they're missing, but overall it's a good company. From an earnings per share perspective, there's a positive earnings per share, good. Sales is increasing, that's a good story. Shares outstanding is kind of a little bit dropping, which is always good. Nice sales growth, I love this. Dropped 10% in the week, but did 30% from the year. I think this is a good one to buy on the pullback. If you look at the chart here from Thinkorswim, stock has dropped substantially here. As you can see here, earnings, stock went up, earnings, stock came down, earnings, stock went up, now earnings, stock came down. So I think, right now I would think it's a good time to buy some into this weakness, and take it from there. When the stock drops like this, there is no point in looking at chart too much, because chart looks ugly when the stock drops like this. RSI is showing some sign of stabilization, which is good. DMI chart is ugly, red line bearish going up, on the balance volume going down, check-in money flow going down. So we should be a contrarian to buy this onto this weakness, because it's got a good sales growth, and shares outstanding are pretty stable, and nice outlook from a company perspective. Next is Teledoc. Teledoc is one of those darling stocks last year. Everybody is afraid of going to medical offices and doctor visit. This company really did virtual healthcare services, and they had their best time last year. And if you see here, earnings per share perspective, they are still not making it, but I think it's understandable. They are working through their own product development, and making it more beneficial for customers. From a sales perspective, I like this. Sales is growing very nicely. That's a good story. Shares outstanding are also going a little bit higher, but when the sales are higher, it's okay to expect some outstanding, not a big deal. And these guys, I think they had they also had a quarterly miss or something along those lines. Stocks sell off. I think stocks sold off. Looks like Cathy Wood is also buying into this, which is a good story. And if you look at the daily chart here, stock dropped 8% here. That's when probably the earnings announced, and now they're recovering from the drop. That tells you now there's a chance that this can start going up slowly. So I would be buying in this Teledoc stock into this big weakness. And if you look at the weekly here, I think 2 weeks, 2 down weeks. And if you look at the past here, 28th of February, 3 down weeks, then rebounded. But they're not quite rebound, to their previous levels. As you can see here, it was 292 or so. Now it's 172. I would be buying slowly into this weakness and hold it for a long time. Nice sales growth. I like this sales growth, and they've done just 4% from the year. So what a difference 1 year makes. Last year they did nicely. This year people are getting COVID shots. Folks are not that afraid to go to doctor's office. That's why stock is down. If you look at the chart here, Teledoc, nice looking chart, not so nice actually. Earnings, stock came down, earnings, stock came down, earnings, stock came down. Same story here. So this is one of those companies, every time there's an earnings, stock comes down. RSI, nothing, great here, 41. I would buy some stock. I would not buy option here. By looking at the stock chart here, if you're option buyer, you will lose some money, because stock doesn't move that drastically. With option buyer, you'll be, the theta decay is against you, so time is against you. Probably not a good idea to buy option here, but you can buy stock outright at this lower price. DMI, I think it's again same story. Bears are in control. Volume average is down, and money is also flowing out of the stock. So you can be a contrarian into this stock. Buy some, don't buy too much, and hold it for a long time. Next is Enphase Energy. I like solar stocks. Enphase Energy and Solar Edge. All these are my favorite stocks. This is into photovoltaic industry, and I think they had a earnings. They beat the earnings estimates. Revenue is up, but I think probably they had issues with their guidance. That's why it came down. They're doing okay from earnings per share. As you can see here, sales growth is good. Shares outstanding is okay, not too bad. When the sales is growing, I'm okay with a little bit outstanding growth here, which is okay. If you look at the price action here, last 4 days, stock is down. Big down day on 28th of April. After that, it's a little bit, not so great down days. But I think it kind of tells you, big down day, huge volume. Next day, little bit, lower drop. Volume is low. Volume is still low in the subsequent day. It's kind of getting stabilized now. I think it's okay to buy some and hold for a long time. If you look at the weekly chart here, huge drop for the week. And this stock, I think it drops. If you see February, they dropped huge. And if they see January, they dropped huge. So in here also, I would not be buying any options, call options, because as you can see, your stock has not done much all the way from January to now. Stock has fallen down. If you're a call buyer, you'll be losing money on this one. From a chart perspective, IV is low here, 1.4%. Stock has kind of done sideways for a while now. RSI is low, bearish from a DMI perspective. On the balance, volume is pretty okay, and check-in money flow is showing money is flowing out. So with this one, I would buy some stock into weakness, not really options play, and take it from there. So I think that's the last one. With that, thank you very much. Happy trading and happy investing. Thank you.